JJ is asking, in hindsight, it's easy to see gold's performance from 2001 to 2011 as one large bull market, but he imagined the hedge process didn't necessarily experience it this way in real time. What were some of the major turns that you called trading gold during this time? Obviously, you're on the buy side then. Were you able to step during 2001 to 2011? You're on the buy side for most of that, obviously.
Yeah. Well, in 2001, I didn't even know what the hell gold was. I mean, I was 3 years into being in the game. I mean, I think it's important to go back and just know that you didn't know anything. I mean, I still don't know anything. I hope you know a little bit more than you knew last week. But again, gold trades with real yields. You don't have to have traded it properly back then or be on the right side, sell side, buy side, or otherwise. You just got to get the rate of change of interest rates. So if you go to the all-time highs of gold back in 2011, what you're going to find is you had the concomitant, I think is the right word. Is that right?
Concomitant?
Concomitant? Concomitant.
Mintant.
Concomitant.
Vocabulary.
Concomitant. I didn't know that when you have both those things happening at the same time, which are bond yields falling, Bernanke twisting, inverting, twisting the curve effectively. You have bond yields falling and the dollar being devalued to a 40-year low. Now that gave you gold's all-time high. So if you believe, which I believe, the only way out for the Fed is to cut by 50 basis points at a time. Eventually the dollar is going to start to go down on that, don't forget. And you have the Chinese now. What happens if they can, aid and abet or kind of tweak it a little bit? So there's plenty of opportunity here for gold to go higher. Most importantly, if we remain in that low and falling interest rate, slower for longer real yield environment, that's the most important thing.
Yeah, totally. And I would I would just add the gold from a currency perspective obviously is competing with the dollar.
Yep.
And from basically 2002 to all the way to the peak in 2011, obviously sans the financial crisis, the global economy was in some version of quad 1 or quad 2 because China was taking off and ascending throughout that. So you had a net falling dollar, rising gold prices, rising pretty much every other currency vis-a-vis the dollar for quite an extended period of time. And since then, obviously that's reversed. But now clearly with global quad 4, gold can also catch that bid on real yields as well.